QuickBooks video, we want to look at dealing with customer bad debts. So those customers that owe you money that you have determined you're not going to be able to collect those dollars. A common way to deal with that, or people will just void the invoice that's no longer going to be paid. But depending on the date on that invoice, that could cause you some problems. Perhaps it's in a previous year and you've paid income taxes on that income, or there may be sales taxes on that income, in which case voiding the invoice may not recoup those sales tax dollars for you. So let's look at a better way to do that. First of all, I need to determine, who's behind, who's paid and who hasn't. One of my favorite reports here is in this customer and receivables section, open invoices, and I'm sorry, not open invoices, it's aging. There we go. So let me make this just a little bit bigger so it's easier to see. So this is how old these customer balances are. Just a note here, this is customizable. The columns are at 30-day intervals, which is pretty standard. Goes up through 90 days, but I can change that. I could say I want a column going up to 180 days, and with that change, you can see the additional columns there in the report. Well, as I'm looking down this, I see there's this one old invoice from Jason Birch in the QuickBooks sample file. So I've determined that something's happened and Jason is never going to be able to pay that invoice. So I want to write that off. It is really old. And how's the best way to do that? Well, I'm going to create a credit memo for that, and I do that because I can date the credit memo in the current period, and that's going to help me get any taxes I have paid back and reclaim those, which I obviously want to do. So the first step in creating that credit memo is I have to be sure that I have the item that I want to use on that. And so I go to the lists drop-down menu and to the item list, and here in the sample file we already have the item that we want to use, but let's take a look at that because you may need to set one up on your own. So here it is, it's the bad debt item. I pull that open. So this has been created as an other charge item, which is correct. That's what I would do. It's been called bad debt. The description that's going to go on the credit memo is bad debt or write-off amounts. That's perfectly fine. You can change that wording if you want. That's going to work. The amount has been left blank, which makes sense. It's going to be different each time, right? The sales tax code is a non-taxable code. It doesn't really matter too much what you use here. If you're going to write off taxable and non-taxable amounts, well, you're going to have to change that at the invoice level, and or I'm sorry, at the credit memo level, and we'll look at that when we create that credit memo. But I'm going to leave that as non-taxable for now, and that's the way I usually do it. And then one of the important parts of the setup is what account is that going to post to, and we have a bad debt expense account, and it is an expense type. So you want to be sure that you have that. If not, you can create that expense account. All right, so as long as I have that, then I can create my credit memo. I'll go to customers, and there we go, create credit memos / refunds. I'm going to make that selection. And here is our credit memo form. Looks a lot like an invoice, except it's obviously going to go the other direction. So our customer was Jason Birch, and that's the date in the sample file. So that is today's date in the sample file, so I'm going to leave that. And the item that I want to use is of course, that bad debt item, right? And you will get this message. This item is associated with an expense account. In this case, that's fine. That's really what we want. QuickBooks is expecting that what you would use on a sales form, like an invoice or sales receipt or credit note, it's expecting that would be an income account, which normally would be the case, but writing off a bad debt hopefully is not very common, so it's the exception in this case. All right, there's our description, bad debt, and the amount on that was 11, or no, I'm sorry, it was 1,005, not 1105. Now here's where, if I had a sales tax component, I could change that to taxable. And then using a current date, this credit memo is going to reduce my taxable sales on my sales tax reports for the coming period. So that's how I would recoup those sales tax dollars. In this case, there's no sales tax involved, so I'll leave that at non-taxable. And that's it. That's all I need to do. I need to save this. Now, when doing something like this, where I want to apply it to an invoice, because I do want that, otherwise I'm going to have the credit and the invoice appearing indefinitely on the customer's end. In other words, I could print a statement for Jason if I did not apply this to the invoice. And that statement would read, invoice $1,005, credit $1,005, amount due 0. Well, I would rather just eliminate that. So the way that I'm going to make that happen is I'm going to select save, right? Instead of my save and new or save and close, I'm going to save here. And then I'm going to come over here and use the credit to apply to an invoice. So right here, use credit to apply to invoice. QuickBooks pops up this little message and it lists the invoice that you most likely want to apply to. And there's only one, and often that's the case. There's just the one open invoice that we want to apply the credit to. There's already a check mark there, so I'm going to click done. Now I'll click save and close. So now if I go to that report I started with, the open invoices report, Jason Birch doesn't even show on here. Whereas, and I just want to emphasize the purpose of that last step, which may not look like it did much, but if we didn't do that last step to apply the credit to the invoice, then he would still be here on this report. Now his balance would be 0, but it would show the open invoice and it would show the open credit. And I would just prefer to get that detail out of the system so it doesn't keep popping up on statements, reports, and so forth. So that's it. Jason is all taken care of. There's one more quick look here. I will show on a profit and loss statement, there's our bad debt expense for $1,005. So it's no longer income. It's now a bad debt expense. We'll be able to recoup those dollars. If we paid income tax on that, we're going to reduce our income in the current year in order to get that back. If we had sales tax dollars, we're going to get that back. So that is the best way to do to take care of a customer bad debt. Thanks for watching.